Welcome everybody. Good morning. This is the Saturday morning Viper Trading webinar. We got to knock out our standard disclaimer before we can get started. So let's get that out of the way. All communications from Viper Trading Systems are for educational purposes only. Futures and Forex trading does involve risk, and there is a risk of loss. Nothing contained in this webinar, other webinars, including the live trading room, are to be construed as investment or trading advice. And of course, everybody in here does know that you do trade at your own sole discretion. All right, if there's no questions on the disclaimer, let's get over to some charts and talk about some trades. Hey, before we get started, I got a question. I'm going over here to screen one where I have Weimer, the mini Dow, our good friend YM. Hey, tell you what, just to sort of connect with the team here before we kick this off. If you were to take, say, the span of a typical week, I'm not saying from day to day, but I'm saying in the span of a typical week. By the time you get to the end of the week, would you say that you are profitable or not profitable? So if you're profitable, let's go ahead and type in a P. Say every week, every 2 weeks, some span of time, not from day to day, because from day to day you can have a good day and you can have a bad day. I'm saying over a span of time, say a week or 2 weeks. Are you P profitable or NP not profitable? Just type in 2 letters, 1 letter or 2 letters. I want to get a sense from the team how we're doing. P for profitable, NP not profitable. I won't say any names or anything. Just go ahead and type in your how are your results looking? Say a week at a time. All right, we're getting quite a few P's. Quite a few P's. Okay, good. We got a couple of NPs, not profitables. Okay, for those of you that are not profitable, let's just take 1 second and type in why, if you can, in a phrase or a sentence or two, why you think you're not profitable. Everybody who's an NP, not profitable. Which is perfectly okay. By the way, there's no judgment here, of course. There's no judgment here. If there's issues to be addressed, that's what we want to take care of. For those of you that are NP, not consistently profitable, and anybody in here who feels like you're not consistently profitable, if you could just take a second, put in a phrase or a sentence or two on why you think that is. I'm actually going to jot this down. Let me get a paper and a pen. Hold on. If you're not consistently profitable, why do you think that is? Just go ahead and type something in. Peter W., I've been profitable pretty much for the last 8 of 10 weeks. Now that's good, Peter. 8 of 10 weeks profitable. That's very, very good. Good for you. Okay, we got. I'm not going to call out any names. I will just say what everybody is saying without the names. Okay, so no shame here. It's the whole reason of these webinars, to get everything out, let your hair down, get everything out on the table, so we can fix it. We got one comment here called over trading. Okay, I can understand that. A comment here from Peter, who is the profitable one of the many profitable traders in here this morning with the P. 8 of 10 weeks profitable. When I am not profitable, it is when I'm trading against the trend and not respecting my stops. Against the trend, respecting stops. Good. Those are very good topics that we're going to add in here to our discussion this morning. David D says, well, David's in here all the time. Too much trading when the market is not cooperative. I'm just going to put down here bad market conditions. I know that's a huge problem. I talk to traders all the time about that. Eddie says trading against the trend sometimes is my problem too. Adam here, I tend to watch the good moves and then I get in too late. Too late on big moves. Okay, good. All right, you know what? You've given us 1, 2, 3, 4, 5 good things to talk about. Let's talk about them right now. All right, so here is I'm going to start with YM again today, and there's a reason for that. Is if you are in the sort of beginning stages of learning how to trade futures, I'm not going to mince words about it. YM is definitely one of the instruments you should take a look at. Mainly because it tends to be smoother than the other instruments. It's only $5 a tick. If you play your cards right and you make a mistake, it's not going to bite you too bad. Okay, it's not going to be like some of these other instruments that can fly 20 ticks in your face in 2 seconds. Weimer, generally speaking, is not going to do that. Hey, I got another question. This will be the last of the questions. In terms of screens, how many screens do you watch? Just go ahead and type a number in. Just a quick poll of the team. 1, 2, 3, 10. When you trade in the morning or whenever you trade, how many screens are you looking at? 0. There's got to be at least 1. 1, 2, 3, 4, 5, 10. There's a reason I'm asking this, by the way. And we'll get on to the trades in a second here. Wow, 4? That's part of the problem right there. 3, a lot of 3s, a couple of 2s. 4 screens plus the webinar room, 6. 4, 3, and listen to the Gary on the voice only. All right, let me just speak to this, okay? Because I was talking to a trader the other day about this. This very topic is very timely. And let me couch it. Let me put it this way. If you are using more than one screen, say 2, 3, or 4 or more, and you are profitable doing so, then don't change what you're doing, obviously, because you're making money and whatever you're doing is perfectly fine. So stick with what you're doing if you're profitable, on a day-to-day and a week-to-week basis. Stick with what you're doing. You don't want to change it up. However, if you are not profitable and struggling and still sort of new at this or in the intermediate stages of development, you really want to get down to one screen. If you want 2 on the second one, perfectly okay to put the webinar in that room, the live room on that other screen, I don't know, a web browser with some news on it, but not a trading chart. Why should you get down to one screen? Anybody? Distractions. In some cases, you can, if you want to do 2, but I would do 2 as follows. I would put one chart on one screen and another chart on another screen. So let's do a hypothetical. Let's just do a quick hypothetical. Let's say that you want to trade YM and the Russell. Okay, I'm just randomly picking these 2. It could be anything. Your screen, the one screen primary trading screen, should look something like this. And here's why. If you've got a bunch of screens with a bunch of charts all over it, and you're trying to track and trade 5 markets, it's too much for you. And that's probably another explanation on why you're losing money. You're distracted. You're not focused. You can't focus on that many screens. It's not possible. what's going to happen is this. Let's suppose that you got this, and you got oil on another screen, and you got gold on another screen, and you're tracking, I don't know, whatever, ES, all manner of things on 4 different screens. By the time you try to catch a YM trade, and the time you try to watch a Russell trade, which sometimes moves fast, and then maybe you got NASDAQ on another one, and you're trying to catch something there, and that's whipping around all over the place, you're missing trades. You're getting in late on trades. You're chasing stuff after the fact because you were staring at something else, and then you go chasing on another screen. For now, in the short term, I strongly urge you to cut everything down to one screen and either have one chart on it or 2 charts on it, just like I'm showing right here. If you want a second screen, like I said, go ahead and put a web browser over there with some news or something if you want, or put the room over there. A lot of people just listen to the room. Tons of people I've talked to, they'll have the room on a laptop and not really even look at the charts because you're so focused on trading on your own screen. The key is this: you've got to pick something and get profitable on it. Well, we call 5 instruments, Richard, because we have people all over the world in our room. Our room is packed with people from all over the world trading all manner of different instruments. And so the way to survive through that, if you're not trading something, it's called selective listening. All right? Let's suppose that you are trading YM. This is your central focus for the morning. You came in here and you put your lines on here, you did your chart analysis, you know where support and resistance are, you decided how you're going to trade it, etc., etc. And all of a sudden, you hear a bunch of NASDAQ calls come in. NASDAQ's coming down to support. Look, it's rolling over at the mid-man. It's taking a short at 27.75. Get in, box it in there. No bias, blah, 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 whatever. Now, if you're trading YM and that's your central focus, do you care about NASDAQ calls? If you are trading YM and that's your central focus for the morning and you're just laser focused on making money on YME and a NASDAQ call comes in, do you care? Yes or no? Does this call on this chart make any difference to you whatsoever? No. It shouldn't. In fact, I would go so far as to say if you're not going to trade NASDAQ, should that chart be on any screen that you're looking at? Okay, let me repeat that. If you are not trading NASDAQ and you hear a call on NASDAQ, should you listen to the call or should you even have the NASDAQ chart up anywhere? No, you shouldn't. Why? Because you're going to get distracted. Now listen, I don't want to come off as a jerk this morning. I'm really not trying to be a hard-nosed you-know-what here, but we got to get real with each other, okay? You can't just keep doing the same everything, staring at 4 screens with 5 charts, and you're losing money every day. You've got to fix it and change something. And the way to do that is to get focus. Laser focus. Whatever you are trading should be right in front of you, and you are focused on it and nothing else. It's distractions. Tough love is good. You're going to get some results. That's right. That's what we're trying to do here, Brian. We can't namby-pamby around about this anymore. And you got all these screens up with all manner of charts, and you're tracking, looking all sorts of stuff. That's why you're not making any money. You got to fix it Monday morning. All right, enough said. Let's get back over to YM here. Okay, let's take a look at what's going on here. Today's topic was trending and not trending and trend changes. Here was YM into the early stages of Friday morning. Now, in terms of a trend, was YM in a trend? Let me get you oriented here real quick. Here was midnight, so this is the beginning of the European session. Was YM trending or not trending? What do you think? Old Wymaroo. Trending or not trending? Coming into not trending. All right. The characteristics of a market that is not trending is as follows. Visually speaking, the background is going to be striped. It's not going to be a solid color like a green or a red. It's going to be striped in appearance. You're going to notice that the bars do not have a predominant color. They're going to be yellow, red, and blue, a mixture of colors. Support and resistance are more or less going to be pretty much at the same spot. In other words, it's not having higher highs or higher lows, and it's not breaking down with lower highs and lower lows. This is a range. Our rule of thumb for trading a range is a minimum of 20 to 25 ticks. Here you had support at 60 and resistance up here at 05. This is a 45 tick range. Perfectly tradable. Now let me ask you the question. We all see that the fact this is a 40 tick range. How many of you would actually trade this range? Yes or no? Would you trade it? Just a yes or no. Would you trade it? Ooh, we got quite a mix here. We got quite a few yeses, but quite a few no's. YM? Yes. No, NASDAQ. Good. Now, in the case, let's talk about this for a second. Okay, so we are range bound here. There's no trend. We are more or less sideways, and we see where support and resistance levels are. In the case where you're not coming off a major downtrend or uptrend, and you've been sitting in this range for several hours, it's perfectly acceptable to trade both sides. In other words, if you're coming down to the bottom here, you're buying support and covering shorts. And up here, you're taking profits on your longs. And you could possibly be shorting this up here. Taking shorts up here. There's enough meat on the bone to take it. Now, in the size of this particular range, is a mid-band trade acceptable? 45 tick range. Mid-band's right about in the middle here. Are mid-band trades okay in a range of this size? What do you think? Can you take them? Yes. This year says I generally don't like to take mid-band trades when a market is sideways. Now I would say that's true in the case of this. Okay, let me qualify this. Generally speaking, if you're in a range, a mid-band trade might not be acceptable for this reason. Let's say hypothetically you wanted to take this mid-band box and you want to take it either way to catch a long or a short. Now here's the qualification, just to be clear about this. If the range looks like this, and we'll look up some of these later on the charts. If the range looks like this, then mid-bands are not advised. Mid-band trades are not advisable because there's just simply no meat on the bone to take a trade. If you get long, by the time you get filled, you're at resistance. And if by the time you take a short and you get filled with close of a bar, you're right at support. There's no meat on the bone. So you're looking at under 20 tick range with the mid-band in the middle. Pretty much you want to avoid that. In fact, if it was this small, this might not even be a tradable range, right? 20 ticks or less, not even a tradable range. Very much, and if the mid-band's in the middle of this, that's definitely a no-no. However, if resistance is way up here, say 20 ticks away, there is sufficient meat on the bone to take a mid-band trade because there's enough room to get some profit out of it, right? So when assessing a range, our sort of golden rule is 20 to 25 tick minimum to trade it, to say it's tradable, first of all. 40 to 45 ticks, this size of range, very, very tradable, obviously. In the case where you're not really coming off a trend, in other words, if there was a big sell-off here, let's say that there was a huge 120 tick sell-off, and you're in the middle of a range like this, and you're consolidating, in the case of a sell-off, you're looking at shorting the tops as your primary mode of entry, covering at the bottom. In the case where you don't have in other words, there's no predominant trend coming into this, it's perfectly acceptable to trade both sides. Buying support, shorting the top. Buying support, shorting the top, and in a 40 tick range, a mid-band is acceptable. Yeah, when you have a lot of yellow bars, Hardy, that's right. It's also sort of telling you you're range bound and you're not trending. There's lots of yellow bars, and they're all clustered around the mid-band here. That's kind of telling you what's going on. All right, so let's advance the chart. We're all clear about that, ranges, right, and what to do? All right, let's move on. Okay, here we go. We're in the pre-market session. It's 2:56 in the morning, Pacific time. Stand by. Okay, I'm going to go ahead and advance this chart into working our way towards the market open. Ready? Okay, it's 3 o'clock, 3:26, 3:30, 4 o'clock. Are we in a trend now? Yes or no? Over here, right-hand side of the chart. Are we in a trend now? Yes or no? Has something changed from over here? Are we in a trend now? Over here. Or are we still, has something changed? Yes. Yes, we are now in a trend. How do we know? Well, for one, we can see that the price action has blown up through the top of the range. The background is now green, right? We have a huge green stealth line following the market up. Bars are predominantly blue. Our mid-band and all the bands are stair-stepping up. So we are now in an uptrend. So it's time to buy, right? Yeah, it's time to buy. Uptrend, you buy, you buy. I'd say we put a market order in right here. If you were an early bird and you're up, market's heading up, we get in. Market order. Where's my object trader? Hit the market order, buy. Yep, uptrend. It's time to get in. Well, you know why? Because we're going to miss the big move. The big move's happening right now. We got to get on the bandwagon. What do you think? Time to get in. I'm loading the boat right here on this bar. If I was up here Friday morning, 4 a.m. Pacific, and I was up and the market was doing this, man, I'd be loading the boat right here. 20 contracts, 20 lot, no stops. Anybody taking that with me? No. You have to wait for the retracement. Yes, yes, yes. You are correct. Hardy, John, Mario, Chris, Peter, and David. This is a tendency that all traders face. And if you say you don't face it, I don't believe you. You know what it's called? There's a weird term I heard the other day. It's called FOMO. What does FOMO stand for? Why do you feel compelled to buy a market that's going up? Anybody? Why do you feel compelled? Why do you feel in your gut, as much as you fight it, compelled to buy a market that's going up? Why? Why do you feel that way? Fear of missing out. That's exactly what it is. That's exactly what FOMO is, a fear of missing out. It's a natural tendency. There's nothing wrong with it. It's human nature. It's built into your DNA. It's in there. You can't just say, I'm not going to feel this way about it, because you are. I feel that way too about everything. The thing's running up and it's like, I got to get in now. This thing's going to run 100 ticks without me. But you have to fight this. Okay, you simply have to fight it. You have to fight it because we all know, in our hearts and minds that after a market has moved in a given direction, it is going to retrace. It's going to retrace. It will. And now let me be clear. We don't know how far it's going to go before it retraces. Yeah, sure, it could run up another 20, 40, 100 ticks. We don't know. It could stop right there and pull back. We don't know. The fact of the matter is, though, if you pull the trigger right here, how many times have you done that? And that's the exact peak of the market, and the thing comes all the way back to support where you should be getting in, and you're stopping out. I know. It happens a lot, huh? Okay, we're coming up close to the opening of the market. If we were going to buy into this on a retracement, which you all said, everybody in here said, wait for the retracement, where might you be buying it? Everybody in here said you're waiting for a retrace. That's good. I'm waiting for a retrace too. So where might we buy it? Any ideas? You want to retrace? Well, where are you going to get in? Trend is up. Everybody says buy. So we know we're getting long. We know that part of it, right? We know we're going to be buying it somewhere. Okay, where? Just type in a number where you think you might want to get into this, YM on a pullback. Midband, 825. Hardy says 818. Fear of missing out is a hard lesson to learn, Hardy. Yes, it really is. It's a stern taskmaster. You know when you're going to learn it? When you pull the trigger and you get stopped out, when it pulls back right into where you should be buying it and it takes out your stops. Once you pop a couple of those and you get spanked a few times, you'll start to not pull the trigger when it moves in a thrust like that. That's what that's called, by the way. You're buying or selling the thrust move. That's a total no-no. We don't do that. No thrust moves. Okay, let's just ingrain that into our brains. No thrust move, buy or sell. We are retracement traders. All right, now most of you have typed in that you would like to buy a retracement if it came anywhere. I'm seeing numbers from here to here. Perfect. So that's the way we think about retracements. That's a good, healthy way to think about retracements, is we want to see something at or near the midband. But the fact of the matter is, it might not get all the way down there, right? Might stop somewhere in here, right? It might perfectly nail the midband, and we love that. You know, I do too. I love midband trades. They're pretty much my go-to trade. Yeah, and sure, it could go a little deeper too. So what is this? Is what? Let me just state the obvious here, and explain what we're doing. First of all, and I'm just going to summarize this as the following. We have determined that YM has broken out of its prior trading range. We have determined that the trend is now up. It was sideways in a range over here, and now is very definitely up. Background is green, bars are blue, stair-stepping up for all the reasons we know. We can clearly see that YM has had what we call a thrust move in the direction of the trend, which is up. We know we are retracement traders, and we are patiently waiting for a retracement into support. The midband is the logical entry place right here. However, we realize that it doesn't always get here. It might go a little more shallow, and it might go a little deeper. So when we do this in our minds, what are we doing? Why did I ask the question, and why am I spending so much time on this particular aspect of any trade that we take? When you do this, what are you doing? When you form this mental picture that I've drawn with these boxes, what are you doing? What are you actually doing when you do this as a trader? You're forming a mental picture here, but what is that? It's a critical part of trading. What is it? I'll type it in for you. You are preparing yourself to take the trade. This is a critical step to your success. You have to do this. You're anticipating. That's right, Hardy, Brian, John. You're planning the trade. That's exactly right, Mario, Peter. Yeah, Gary says this. Gary has some different terminology. He'll say look to the left to trade the right, but it's the same thing, right? You are preparing. This is critical to your success. If you do not do this step, your success in trading is in jeopardy. Because what you're doing if you don't do this is you're throwing yourself to the wind and you are saying, you know what? Let's see what happens when the market pulls back. So in other words, you might be, and I know I'm speaking to some of you out there in the room right now. I know this is some of you, okay? And it's perfectly okay, but it's something you got to work on and something you got to fix right away, right? You see the move, you know it's up, you know all that, right? Let's see what it does when it pulls back. If you take that sort of attitude towards it, it's going to really affect your ability to make money consistently because you've not prepared yourself. You have to physically get ready to take trades when they come back into your sweet spot. You've got to get ready to take them because this is your opportunity right here to make money. Those three boxes right there on, at, or around the midband are the sweet spot of you making money. Now, I'm going to go ahead and advance this chart. We're getting close to the open of the market. And when you see an opportunity to step in and use a tool like the Object Trader box, a region box, a limit order, market, however you want to get in, you type in N for now. Ready? I'm going to start advancing the chart, and we're going to pretend we're watching this in real time now together. Ready? Here we go. When you see you want to get ready, you're going to pull the trigger to take the trade. You type in an N. Here we go. I'll go slow and I'll blow it up. Here we go. Type in an N. When you're ready to pull the trigger, you got to type in an N. Whether it's a box or array or it doesn't matter. This isn't a question about the tools to use to get in. It's just an N to get in. All right, time's up. Some of you said you missed it. There was quite a few of you that there was several spots to get in. Now that you look back on it, where was the spot to get in? I see at least two, possibly three of them. Where was the spots to get in now that you see it? Where? Now that you see it. Obviously, it's not up here, right? You said N up here. That's incorrect. The moves, you're already scalping. You're already running. You already got the trail stop in, and it's not up here. Okay, I'll just take that off the table. The three spots that I see good answers coming in from everybody. Richard, Adam, Mario, David D, John, Michael. Those are all good answers. The first area I see would have been right here. The second area I see would have been right here. And the third area I see would have been right here. Now, why do I say those three areas? I see some of you typing in times and numbers. Those are all right. I see those. You're putting the areas in right there. Well, let's look at these three areas closely, and then we'll move on. This is really critical, and this is why I'm spending so much time on this. First of all, I want to make note of the fact of this. For you mid-band traders, we didn't get to the mid-band. Okay? We never got there. All right? But there was some clues that were left here, little breadcrumbs that were occurring that made us okay with not waiting to the mid-band. I submit to you this. If you put one of these three boxes up and the trend was up, and you did not enable the downside, so you were only looking for longs, if the market went deeper like this, would it matter to you? If you put a box here in this somewhat shallower retracement that never got to the midband, and for some reason it closed lower and went down here, would it make any difference to you? Are you harmed in any way? Would you have had losses if it went deeper? No, because the short side is not enabled. All the bars in the world could go down here, and you don't care because it's not taking a trade, right? This is long only in this case right here. You're long only. You're only taking longs. It could go all the way down to here. We don't care. It doesn't matter. You're not in a trade. So why wouldn't you just throw a box here then? Out of everybody in this room, I'm going to count how many answered now at the right time. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 9 or 10 of you said that you would box it, and I saw the ends coming in right here. I saw a couple, the three of them come in right here. You said as soon as you saw those two bars, you said now, that's the early bird. Then a whole slew of you, more came in right around here, and a couple trickled in around here, and some of you said now over here. Don't be fearful of using the tools and putting the box up. That's how you get into trades. If you have gone through the work to anticipate where to get in mentally, you've prepared yourself to take the trade, yes? You're prepared. You're mentally and physically ready to go. And it comes into the sweet spot, which is this area defined by generally this box right here. Then you cannot hesitate. This is not the time for sitting on your hands and drinking coffee and playing with your dog. This is the time to take the trade right here. You put your region box on, you hit a market order, you put a limit order. I don't care how you get in, you're in here. This is the trade. Now, can you see these lines right here? Do you see them? Right there. What are those lines telling you? These dashed lines right here. What is the significance of these lines? What is the dashed line? What does that mean? What is this? It is support now. Yes. The support is located a couple ticks above the midband. What is this telling you when you see this? What is it telling you? Is that helping you with anything? Does visually see anything? Yeah, it's showing you where support is. It's showing you what's physically happening here in this market at this particular point in time is that the profit taking from this move up that has caused this retracement, which that's what it is, it's profit taking for all those traders and market participants that were long from lower levels are taking profits. That's the cause of this retracement, and that they're finding a level of support located right here. So if you're going to be stubborn and wait for the midband and say, well, I'm not taking that trade, Charles, it's 3 ticks above the midband, I'm not getting in there, it's too high. Well, then you're going to miss it. You're going to miss the trade because lots of times the market will come to a more shallow retracement above the midband, and you have to be prepared to pull the trigger here. Sometimes it will come to the midband perfectly and sit there. We love that. That's our favorite trade. It's my favorite trade. And of course, we know sometimes it goes deeper. The key takeaway is this, and I'm not assigning any blame here. If you miss this, it's perfectly okay. But this is what this should be telling you. If you didn't say to pull the trigger until way over here somewhere, because now you're convinced that the market's going up, you're getting in trades way too late. And if you're losing money, that's probably a contributor to that because you're missing this critical step. Or you could be preparing yourself. I mean, many of you could be in the situation where, yeah, I see the market was going up. I was waiting for a retrace. I'm waiting for the mid band. It never got there, and so I'm missing these trades because I can't pull the trigger here when it's not at the mid band. Well, then, I think you see here clearly you're going to wind up missing a lot of trades, a lot of good trades. And the final thing I have to say is this. How do we know that this market was going to go back up? I think this indicator, what is this indicator called? It's a part of our standard template, John. I think it's isn't it swing high low? I think it's called. It's on our standard template. The dots and the dashes, these dashes right here. I think it's called swing high low. I'm fairly certain that's what it's called. Yeah. Yeah, the green stealth was starting to come back. The bars were starting, you could see that the support was building right here. Whenever you see something like this, if you're trying to get long or short, okay, and you see these lines are building and they're there for an extended period of time like this is telling you it's a visual assistance to show you where support is. You want to buy and pull the trigger here. Now, here's the other thing to alleviate some of your fear, because I know what some of you also are probably saying to yourself, sort of anticipating what you might be thinking, is, well, Charles, you know what? If I pull the trigger here and it's only pulled back to here, what's to say I'm not long on one of these bars and then all of a sudden it tanks? I'm going to get stopped out. I don't want that. How do I stop that? I don't know. Let's say you pulled the trigger and you're long right here. And you used Object Trader region box, and your protective stop is 12 ticks down here. I don't know. This is all hypothetical. Do you have to leave your initial stop down here if you took this box and you're long right here? In other words, if you took this trade, what should you do with your stop? Object Trader put it right here. Hypothetically. Wherever the region, whatever your setting was, it put it down here somewhere. You got to leave it down there? I don't know, Charles. It might retrace and come down into here, and I want to get in anyway. I should probably leave the stop way down there. Pull it up. Pull it up. What I'm trying to tell you is this. If you are fearful and nervous and concerned about taking shallow retracement trades, one quick way to alleviate that is to take that stop up super, super tight, like that. I would even go so far as to say maybe a tick or two under that line right there. Now, if you get bit, what's it going to cost you? Well, you're filled long at 29, and support is, you put your stop at 20, 21. How many ticks are you bit if you get hit? $8 or $9. You're out. 40, 45 bucks on one lot. Right? And furthermore, I would submit to you that once you got your scalp trade off here, if you had 2 on, you would start trailing your stop up, right? And now it turned into a profitable trade. Turned into a heck of a trade, didn't it? Turned into be a heck of a trade. You probably got stopped out way up here somewhere. So that was your runner right there. You had your scalper right there. Let's say if you had 2 lot. Here's the runner part of it right there. What was the runner part worth? Well, let's check it out. What do we say we got filled at? 29? Let's call it 30. Let's use a round number. And you'll say the runner got stopped out up here at, I don't know, what's the round number? 80. 80-ish. That's 50 ticks. And let's say you got an 8-tick scalper here. 30 to 30, well, that's 40. You can say 10. You got a 10-tick scalp, just keep it easy, and a 50-tick runner. So all in all, 2 lot on this thing. You felt almost no heat. You could have got in here. here, or here, region boxes. You got 10 ticks on the scalper, and you got a 50 tick runner. A 60 times 5 is a $300 trade right at the open of the market. My boxes are all closed, Pat. My boxes are all closed. I need to see a close above or outside of a region box is personally how I trade it. Now, I know Gary and quite a few of you use the touch. The touch is perfectly acceptable. So, for instance, if you had a region box here or anywhere of these three places, and you had a touch, it's quite possible you could be filled in the lower level inside the box. Or if you had closed bar turned on. If you closed bar turned on, one of these bars closing up could get you in. So you could theoretically be in, down in here. You'd have to wait for the close up here. Personally, to answer your question, I am a closed bar person. Yes. So I draw my region boxes, and when the bar closes, I'm in. So for instance, on this bar, I would be long from here. And this one would be long on that bar right there. And this one would have been long over here. If you would use closed bar with a region box in any three of these boxes, those are the bars that would have got you in. That one, and this one. Yeah, I mean, a 60 tick trade right out, 50 tick trade right out of the gate is good money. In fact, for some of you, I would submit that it would be possibly a one and done. You could have pulled the trigger on the box, took the long, got the scalp, trailed it up, and got out. Yeah, could be your one and done, $300 right out of the gate. Thank you very much. Go into sim. That's what we want, right? Our goal is to make money profitably for as least amount of trades as possible. Our goal is to get 1 or 2 trades and be done. Now, before I move on, I see one more trade set up on this chart. Where is it? You got 10 seconds. And then I'm pulling something else up. There's one more trade set up on this chart. Where is it? You have 9 seconds. Time-wise, here's time. Or level-wise, here's the numbers. 8 seconds. There's one more trade set up on this chart. Where is it? I'll give you a hint. It's long. Trend is up. We're getting long. Where is the other trade? 6 seconds. Time-wise or level-wise. So you type in a number, where the trade is located, or a time. Time is down here. 4 seconds. Where is the other trade on this chart? We talked about the range. We talked about at length this trade. And there's one more setup here that everybody should see very clearly. 3 seconds left. Where is it? And then we're getting off of this chart. We're moving on. All right, time's up. Right here at the midband. Good. Let's see. Minaj, David, Hardy, Brian, Richard, midband boxing in with the Ricks. Good. Mario, Adam, Peter, Pat. Hey, Pat G. I didn't see you in here. Hey, Pat. Yeah, right here. Yeah, right here. Right here's the midband. Nice little tidy, snug as a bug in a rug little box here, huh? See it? I'd say if you said anywhere between time-wise, this would have been about 7:04-ish to 7:06, so about 2 minutes it sat here. That's plenty of time to put a box on it. Yes. You could engulf that candle too, and you would be filled long on the close of this bar right here. And if you said anywhere around 869 to 870, 874, you were correct. Yeah, it's this little midband box right here was the other long trade on this chart. And let's see what happened with that puppy. Oops, let me get my little cursor off. Sorry about this. I believe we took this trade too in the room, didn't we? Anybody remember? On Friday? I think we took this trade. I think I took this trade. Now, what do we make note of when a market comes up to here? These dashed lines, Peter, I think it's the, like I said, I think it's the swing high-low indicator. I'm fairly certain that's what that is. Yeah, it's part of our standard template. So if you get Everybody should have our standard live trading room template. It's part of that. You got the predictors on there. You got the mid-band. You got the bar color, background color, all that standard template stuff. Swing high-low indicator is the dashes. Yeah. Bank some coin. That's right. We're banking some coin. Because as we see this, and I think we called it out in the room on Wyme, what could this be? What could this be? Double top. That's right, Pat. This could be a double top. How would we know it's a double top? Well, let me advance the chart, and you tell me when you think you know. How about now? Now, why would we say that this is a double top? Why? Why do we say now we know it's a double top? Why are we saying now? Now we know. Why? I see quite a few typed in now. Why? If this was not a double top, what should have happened? Shouldn't it have blown through here and kept going up? So what does a double top mean? Why do we say that all the time in the room? Why do we say, what, that could be a double top? Watch out, that could be a triple bottom. Who cares? So what? Double top. Who cares? Bap bap. That's my 3-year-old granddaughter calls me. 3.5. Double top, bap bap. Who cares? Trend change could be coming. Profit takers are coming. It's hit resistance and it can't break it. Yes, 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 a million times yes. Good for everybody. You, David D. Hardy, Pat, Mario, you're on fire. Yeah, yeah, yeah. I could. What this is telling you, this is, and let me just, I know I'm joking around, but let me get serious for a second, okay? A double top has significance because what it is telling you is that there is not sufficient buying power to take this top out. The upward pressure, the buy programs are running out of steam here. They're running out of gas. They can't push this up. When it did this, this was a telltale sign when the market did this. You had a thrust. It pulled back right to check where it popped up, where you got in out of the box. Yes. It took one more feeble attempt to break it, and it couldn't do it. Maybe it broke it by a couple of ticks. That's why we say that in the room. It wicked and broke it by 3 ticks, but it's a double top. The significance of this is telling you that the upward move is running out of steam. There may be no more gas in the up tank here anymore. We have to be prepared for a possible trend change. It's probably going to have some kind of deep retracement because there's no more buyers here. The profit takers will kick in, and then eventually perhaps the sellers might come in. That is the extreme significance of this. So when you hear double top or you see something and you think double top, we have to perk up our spidey sense and say, hey, 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 hold on a minute. Something afoot might be going on here. We're getting back to this. It's like that old Boy Scout saying, be prepared. Be prepared. Those who are prepared make money. Those who are not prepared, generally speaking, do not make money. And that's the significance of a double top or a double bottom. Now let's go ahead and advance this chart. Man, I've really spent the whole thing on this chart. I hope that nobody minds. We had a lot to cover on here, and hopefully you got something out of this. I'm going to continue to advance this chart. But before I do that, I'm going to ask this question. We're coming up on 7:15, 7:20. I can't remember if we had news. I think it was new home sales or something. And we're getting ready. If you're going to prepare yourself to take the next trade on YM, what should you do? What should you do? Okay, you're sitting here on Monday morning. Excuse me. It's Monday morning. You're trading YM. Maybe you got this trade, maybe you didn't. Maybe you got this trade over here, maybe you didn't. Maybe you got this trade, maybe you didn't. It doesn't matter. Now it's 7:20. What are you going to do? You hear in the room somebody says, hey, watch out on Wyoming. That might be a double top up there. Now you're going to prepare yourself for the next trade. What are you going to do to prepare yourself for the next trade? This could be anything. Let's take YM off this chart. Let's say it's the Russell. Maybe it's NASDAQ. Maybe you're a NASI trader. Maybe it's gold. Could be oil. This could be anything. What are you doing to prepare yourself? Draw lines? Wait? Look for another entry? Get ready to box the mid-band either way, says David D. Minaj says, watch around that 865 area for a potential trade setup. Good. Look, here's what we need to do. I'll just cut to the chase. Okay, I'm going to cut to the chase. Here's what I do. My eyes, when the market is here, are not focused here. They are somewhat. My focus is split. Maybe that's a better way to say it. I'm partially paying attention to this. And if I'm in that trade, obviously I'm managing my stops. But my mind is also looking at this right here. I'm looking at here and here. Why? I'm looking at here as it's happening, and I'm looking at here. Why is my attention split? I'm helping you out here. This is the dancing prepare yourself sign. Why am I doing that? You said to stay focused, Charles. What's going on? You say now you're telling me to split my focus between here and here. Why? What are you trying to tell me? You're just sending me mixed messages. Yeah, you're looking at what could happen next. Always, 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 a million times always. I don't know how many words to say to you. Always. You should be focused on what the current price action is related to your current trade entry, targets and stops, potential double tops, whatever. It says, in other words, this is what's happening now. And this is the anticipatory part of trading. You are anticipating what is happening next before it ever gets there. I'm going to go so far as to say this. And I'm going to do it this way. And then I'm not trying to be a jerk here, but I'm very deadly serious about this. Well, maybe that's too strong. Anticipate. If I could share anything with everybody in here, it would be this word right here. To change your trading right there. Anticipate the next move. If you did this one thing, if anything you listened in the last hour and you get this part of it out of it, then it was all worth it. You have to bifurcate your focus. And that's why it's so hard to watch 5 charts. How would it be able to watch 5 charts when you're doing this all the time? Looking at where the price is now, thinking about where you're going to get in, thinking about where the price could go. Where is the next trade set up going to be? Where is the next trade setup going to be? I'm saying that to myself all the time when I'm trading, constantly. That's why you hear things in the room like this. If the market pulled back anywhere around 869, I'd be looking to box it there, let it go either way. I might be looking for a bounce there. We'll see what it does. I'm looking for a pullback around 870. Now, I'm not saying those words in the live room to hear myself talk. Everybody knows that, right? I'm not just randomly saying words to fill space. I'm telling you what I'm doing. That's why I do that. I'm telling you that I'm looking here already. The market, and I'm telling you that when the market is up here. See? The market is here, but I'm telling you this. What does that mean? That means I'm looking at this, managing a trade, And I'm thinking about here. Now, if you could learn to do that, I'm telling you, you would get quantum leaps in your trading. Your trading would change tomorrow, Monday, next week, if you did this. So let's try to work on it. Okay, here we go. Here's the market right here. It's 725. We've had some big up moves and some big down moves. What are we going to do? We did this in the room. We put a region box around it. We let it go either way. You ready? What's it going to do? Sit still in the box. It sat here in this box for quite a while, didn't it? Remember? In fact, I think I remember saying this thing. It started to go into this box, arguably around 724, and it was still in the box at 730. It sat here for 6 minutes. Do you think you had enough time to draw a box? 6 minutes for the market sitting in the same spot for 6 minutes? Yeah, it was more than enough time to put a box. It sat in that box for 6 minutes. Blammo. We got short. In fact, as I recall, NASDAQ and the Russell had already sold off and dropped like 20 or 30 ticks. So we had a good idea that WYME was going to break. Remember? You remember that, Hardy? Adam? Anybody that was in there? Yeah, Richard. Yeah, I think this is, yeah, some of you remember that. Okay, we called it and we took it, and I actually took that trade. I remember it. Now, if you miss this box, is there another chance to get in? Is it too late? You were asleep. You went to the bathroom. You weren't here. You were gone for 6 minutes. Aliens abducted you and you missed 724 to 730, but there's a time gap. There was a black hole. Whatever. You didn't get this box. Trade's done. It's gone. Let's just take off. Go fishing. Where's my golf clubs? Or is there another chance to get in here? I don't know. I'm heading out. I'm going to go get a snack. I feel like a breakfast sandwich. I'm going to run down to Jack in the Box. Get a bacon and egg and cheese biscuit. What's it doing right here? What is this? Here. Excuse me. Let me advance the chart. About now. What is this? What is that? Anybody? What is it doing? What did it do? Let's see. It came down and hit this swing at 53 at 733. And then for the next 3 minutes, it sat here. 5 minutes. 4 minutes. It just sat here. What was it doing? Was there another chance to get in this trade, yes or no? That's what I'm asking you. Was there another chance other than this box to get in the trade, yes or no? Yes. After it sat in this box for 6 minutes and you got filled short on one of these bars, it went down in a thrust. It probably got your scalper trade off at least 5 ticks. Came back up and checked where it broke down right here. You had forever to get in this trade. Yes? It sat here forever. 6 minutes is forever in futures time. Anyway, so what happened here? And then you had another chance. There was 3 chances to get in this trade. Here, and arguably, when it came with another thrust, came up and kissed stealth and rolled over right there. And then what happened? Well, by the time, as I recall, Russell had sold off probably 60 ticks. NASDAQ was down probably 50 ticks, and the YM was finally starting to break. Everybody remember this trade? Came all the way to where? What is this level right here? What's that line from? Why is Gary the Lion King? Why is that important? Yeah, it's support. All right, let's wrap this up real quick. This is the last thing I'm going to show, and then we're done. Scalper trade was here or here, depending on the length of your scalper. If it was only 5 ticks, you might have gotten it here. If it was 8 or 10 ticks, you definitely got it there. The second leg of the trade was down to here. Let's do some quick math. Let's call the scalper a 10 ticker, and the runner was from 65-ish to 8, 12, 10. I don't know, 15. 15 to 65 is another 50 ticks. Where have we seen that before? Why is it always 50 ticks? You think there's any significance to that? Why is it retracing after a 50 tick drop? Why is there air? Why is there mountains? So we can breathe? Anybody ever notice that after Weimar drops about 40, 50, 60 ticks, she normally gets some kind of retracements? You ever notice that? Is that a number we might want to have in our heads? Especially when it comes right down to a prior support level that we've already identified from way back over here. Is there any significance to this support level that it just hit? Yeah. Might you want to be covering some shorts down here? Yeah. So let's recap. Right at the open, we had a long trade here. We were in a trading range all night on YM from Friday morning. We broke out. It was 3 o'clock in the morning. We probably didn't catch it. We saw the thrust move, however. We anticipated a pullback. We got a shallow pullback and 3 boxes to get long here. This is right around the open of the market Friday morning. Excuse me. 50 tick runner. Could have been a one and done. With 2 lot, you might have made 50 or 60 ticks, $250 to $300, one and done trade here. If you missed that, trade number 2 was right here. Pull back mid-band box, textbook, called live in the room. I took it. Popped up. We get a double top. We called a double top. We suspected potential weakness. We were looking for a pullback to the mid-band. We got it right here. This was trade number 2 right here. We anticipated the mid-band box off of the double top. We prepared ourselves. We boxed it. We had 5 to 6 minutes where it just sat there, letting us put the region in. We got the short on the close. If you missed it, you had 1, 2 chances to get in on small retraces back to resistance to get the short. It tanks all the way back down to where the breakout occurred at 8:04, and we cover the short for another nice 50 tick short. Trade number 3. All in all, you had well, let's not count the scalpers. Let's say you were trading 1 lot. You had 1 trade for 50. You had another trade for maybe 10 at 60, and you had another trade for about 50. 110 ticks on 1 lot would have given you around $500, between $500 and $600 on 1 contract on 3 trades. Was that a good morning on Wyoming? What are we going to do different come Monday morning? This is the flying anticipate sign. How many of you are going to start trying to think ahead a little bit? Bifurcate your focus. Current price action, anticipation, anticipatory, anticipating. Why are there Democrats and liberals? Why is there the right and the left? I mean, you could put that on anything, right? Why is there lightning? Why is there anything? Anyway, all right, look, that's a wrap. Thanks for coming, everybody. I hope you